Hey everybody, I am Joy Bailey, the Mortgage Boss, and I am wanting to talk to y'all this week about something that I never talk about. I kind of shy away from it for a reason. And that topic today is going to be down payment assistance. Okay. So we're going to talk about a couple of things. One, first-time home buyers. What is a first-time home buyer and what is a first-time home buyer program look like? And if you're interested in some free money, what the pros and cons are of those type of options. Okay. So I talk to people every day, and every day I get one phone call at least, and people will say to me, hey, I'm a first-time home buyer. And when people say it, it comes across like they're waiting on the floodgates to open up. Okay. I want to dispel that as it's a myth. What is a first-time home buyer? Let me start here. So a first-time home buyer is someone that has not owned a property in at least 3 years. So technically, you could have owned a house before and then maybe sold it or something like that. And now it's 3, 5, 10 years later and you decide you want to buy a house again. So that makes you technically a first-time home buyer. When people call and they're like, I'm a first-time home buyer, I know, because I've done this long enough, that they're waiting for me to say, oh, excellent. Here's all of the things that you get when you're a first-time home buyer. Unfortunately, those things are just not true. When you are a first-time home buyer, you have to have some money. And the reason why there's not this free opportunity out there to walk into a house with no down payment and no closing costs, it's just simply because the market isn't there. The market doesn't allow for that. Right now, we have more buyers than sellers, and there's no need to incentivize more people to get into the market to purchase a home. That was true, after the recession fallout and after there were so many houses on the market from foreclosures and things of that nature. It was necessary to motivate people to try to get in a home. So if you're a first-time home buyer, you did reap a lot of benefits. Maybe you did get some free money, some down payment assistance. The sellers probably paid the closing costs. If you were with builders, they probably gave you $20,000, $30,000 in upgrades to build a home with them, like a D.R. Horton or something like that. That's just not true anymore. When you are a first-time home buyer, excuse me, when you are a first-time home buyer, the expectation is that you have some funds available to complete the transaction. And when I say some funds, I mean all the funds. You need to have your own money for your down payment. You need to have your own money for your closing costs and any other incidentals along the way. And you also need to have some money left over. So, in my prior videos, if you've not seen it, I've talked to you about how much money you need for a down payment. And I've also talked about what closing costs are and what that looks like. Generally speaking, when you are purchasing a home, you're going to need to have, at a bare minimum, I would suggest having about 6% of the purchase price. 3% as a minimum down payment, and that is a first-time home buyer program through Fannie Mae and through Fannie Mae and Freddie Mac. And then I would suggest having another 3% to cover all of your closing costs. Your closing costs, depending on the state that you're in, are probably not going to be 3% of your purchase price. However, just be prepared just in case. So back to my math that I used a few weeks ago. If you're doing a $400,000 home, 6%, you need to have about $24,000 to be able to complete that transaction. $12,000 for your down payment, $12,000 to cover all your closing costs in the transaction, okay? So that's mythbuster number one, okay? You need to have some money even if you are a first-time home buyer. Well, what if I don't have the money? Okay, so there are opportunities for down payment assistance. If you check your local city, county, and state, if you go into a Google search and you type in your state housing finance agency, there will be a list of different programs that will pop up. One thing I will tell you is you are going to have a much higher interest rate because ain't nothing free in the world. you're going to pay this some kind of way, some way, shape, or form in most cases. Somebody can very easily come behind me as another loan officer and say, oh, well, no, that's not true. That's why I say in some or in most cases, okay? You're always going to be able to find an exception to that rule. This is a very general statement that I'm making right now. Nothing's free. So whereas the person that's putting down the down payment of their own money, they might have a 3% interest rate. Your interest rate might be 4%. You're paying some kind of way for that. In addition to those down payment assistance programs, it can potentially, usually, limit you in what you can buy. It may be a program that determines, what area of town that you can move to. It may be a program that is going to limit your income. So, if you earn $100,000 a year and you don't have down payment, you may not be eligible for down payment assistance programs. Down payment assistance is generally going to be for people that just don't have the resources available to save up that type of money. So if you're moving to this $400,000 house, you are probably going to have some funds available to you for you to be able to, make your own down payment and pay your own closing costs. Another thing is your credit score has to be higher than it would typically be for just you qualifying for a standard FHA loan. Standard FHA loan, minimum credit score is going to be a 580. A standard conventional loan, minimum FICO score is going to be 620. Most of the time, you're going to find that these down payment assistance programs are going to require you to have a 660, a 640, maybe even a 680 to qualify for the program. Why is that? Well, they want to know that you're going to make good on this free money that you're getting. Okay. So there are some pros and some cons. So it's right now money kind of sort of is not coming out of your pocket in one large lump sum. But, there are going to be some issues. So you want to make sure that you're reading the fine print on whatever the program is that you're signing up for. Another one is the fees are significantly higher because more hands have to touch it. Those are third-party transactions, meaning 9 times out of 10, the lender is not extending this down payment assistance in their name. They are the liaison to whoever the agency is that's providing those funds to you. So I would do the loan application, I would pass it off to them, and they would have to go through and make sure that you qualified and everything. So because now you're not just paying me as a lender, you got to pay them too, your fees are going to be higher. So again, getting back to the first thing I said, you still got to have some money. You still got to have your own money when you are using down payment assistance, okay? Nothing is free. Nobody's walking into a house with $0. Another thing that I wanted to touch upon is another reason why you're going to need money, even though you may be using down payment assistance, is because it's a highly competitive market. And in this highly competitive market, you're going to be required to put down some earnest money, some due diligence money to hold your spot for the seller to be, enticed to take their house off the market for you while you're getting your financing in order. So you're going to have your own money for that. Another thing that you're going to have your own money for is, your inspection, appraisals, and things of that nature. So the goal of this talk today is to make sure that you understand that even if you choose that pathway, you're going to have some money available. And I know I keep saying it over and over again, but I just want to make sure that we're getting the right information out there and we're dispelling these myths that if you're a first-time home buyer, you don't have to have any money at all. Another thing that I wanted to kind of touch upon is if you are going through a down payment assistance program, it's going to take a little bit longer because, like I said, it's going to touch more hands. And in this market, someone may not necessarily be inclined to choose your offer if they know that you're not going to be able to close on a loan for 45 days. They may select someone else that can use their own funds and they have all the ducks in a row and they can close in 21 days or in 30 days. So there's some pros and some cons to doing down payment assistance, okay? So just to quickly recap, pros, yeah, you can get some money, you know, for your down payment. Cons are going to be, you're going to have a higher interest rate, you're going to have higher closing costs. You're not going to be able to necessarily use the property in the way that you want to. So a lot of times, I didn't mention this a little bit earlier, so I'll mention it now. You're going to be required to maybe stay in the property for a particular amount of time. You may not be able to turn it into an investment property. So you want to read the fine print on what these assistance programs are. These are monies that are oftentimes put as a second lien on the property, and in some way, shape, or form, either going to be repaid when you sell the house, or perhaps forgiven, or maybe you'll make small payments along the way to be able to get those funds. So every program is set up a little bit differently, and I just wanted to, again, make sure that I'm very clear that just because you are a first-time home buyer does not mean that there's going to be money available to you for that sole purpose of being first-time home buyer. You need to have your own money. Most programs that are considered first-time home buyer programs require you to put down 3% down. If you don't go that route, then you'll be doing down payment assistance. Down payment assistance is going to be money that you will be receiving. However, you need to read the fine print as to what the qualifications are. Higher credit score is most likely going to be required. And again, you're still going to have your own funds for some things along the way. I really hope that this was very helpful to you. If you have questions, I'm more than happy to answer the questions. But again, I'm definitely not a down payment assistance guru. I just know what I picked up along the way. Most of my borrowers have their own funds whenever they're buying, but it's just something that I thought would be helpful as you're making your plan for your journey to homeownership. Give me a call if you have questions, or message me on IG. Y'all have a good day.